All right, we got people coming in. I'll start this off. Man, good evening. Good evening. My name is Kelsey Maynard. I am the small business advocate for Invest Atlanta. I want to say thank you guys for joining us for our webinar series that we've been doing all year consistently, trying to make sure we bring in the resources and the opportunities and the people to you, our businesses, so that we can be prepared for small business here in the city of Atlanta. If you're not familiar with Invest Atlanta is the economic development arm of the city of Atlanta. So we handle things from housing and affordable housing development all the way to economic development in our small businesses, small business loans and things of that nature. So excited to be here with you all this evening. So we got a couple house rules. So if you'll see at the bottom, there's a Q&A section. So if you have a question about the information we're talking about, you can put it into the Q&A chat, and we'll be sure to get to those questions towards the end of our conversation. Also, this will be recorded and there will be an email sent out. So if you register for this and you're on this call, an email will be sent to you with the information and the links to both me and Richard, but also the recording of this particular webinar. So don't worry about that. If you missed the beginning of it or you have to leave towards the end, we'll make sure we get the recording to you. Again, this webinar is about something very important, which is our small businesses. But more importantly, just having the information to know how to plan and prepare our small businesses. Richard here, I'll give him a great introduction shortly, but Richard Wright is a CPA, and there's very few Black CPAs out there, right, Richard?
Yeah,
very few of them out there. So what we want to do is make sure we take advantage of the opportunity to speak with one of the CPAs that's in our network, but also hear about the information that we need to know about how we plan our business, prepare our businesses for tomorrow, but not wait until tomorrow to do it. How do we plan for things today to make decisions for our businesses tomorrow? So that's the gist of our conversation. I'll let Richard introduce himself and we'll start this conversation.
Good evening, everyone. My name is Richard Wright, and I work at GMIN. I'm the CFO there. And GMIN is a Georgia Micro Enterprise Network. We specialize in two things. We specialize in helping federal, state, local governments with their ARPA funds. And we also specialize in working with small businesses to help them get funding. We have grant and loan options. And we also work with small businesses, helping them set up their accounting infrastructure, their marketing plan, any legal issues that they have, and also HR items. So I'm glad to be on the call and answer any and all questions.
Well, I appreciate that, Richard. Listen, so not only is that, so GMIN is a part of our ATLM business consulting program. So we offer no cost consulting, no cost to a business owner if you're in the city of Atlanta consulting. And Richard and his company is a part of that. And so a lot of the services that we're discussing today may be something that if you need it, you can actually go and get that assistance right there through our ATLM business website. But Richard, listen, we've had many conversations over the last few months about business planning, not just the business plan, but business planning and how we should best structure our business financially and what kind of things we need to have and continue to monitor as we're growing our business. Can you talk a little bit about something I know a lot of us have been hearing more about as we grow our business, financial plans or the profit and loss statement or income statement? Like, what is the income statement and how should we kind of use that to make decisions moving forward?
Yeah, the income statement, we all have a personal income statement, right? We receive funds, W-2, we receive income, and then we have expenses that happen throughout the month, and then hopefully we have enough to save and put away. Well, businesses operate the same way as we do as individuals, and so the revenue that the business creates and the business has is the income, and then we have expenses that happen throughout the month. We pay rent, we buy supplies, hopefully we pay our accountants, and so once we do that, then we have net income, and so that's what the profit or loss statement kind of highlights to anyone who's looking at it, is how you have performed that month.
Okay. So a lot of the businesses, and you know what, I want to encourage you guys, since we got a CPA on hand today. If y'all have any questions that you want to ask the CPA, or you like, hey, I don't have a CPA, I can afford one, but I got a couple questions about my business, put them in the chat so I'll be able to ask them so we don't go home and have questions we never use it to reach out. So if you got a question that you wanted to ever ask the CPA about your business, use this time to do that. Put in the chat. I'll make sure I ask you a question. Now, Richard, a lot of the business that I run into as a small business advocate, they have Square or some type of QuickBooks or some type of, program that they use to document their sales, right? But when I ask them to produce a profit and loss statement or income statement, they usually go into Square and pull out the report. But oftentimes that report only shows me what they sold. Like what are your recommendations for somebody that's using Square or QuickBooks to better document their money, their business funds?
Business funds, yeah. Whether it's Square, well, let's understand what Square is, what Cash App is, what Venmo is. They are third party platforms that are the middleman in the transaction between you and the client. And so the client slides a card, they go online and they use debit or credit and they pay you. And so it's processed through the third party. And so the third party, now most of them will allow their information is allowed to kind of intersect with QuickBooks. And so I advise every small business to get QuickBooks Zero, get an accounting software. And so the software will kind of interface with Square, and that's how you get your revenue number. And then also what the software as QuickBooks does is that it drags in information. Once you connect your business bank account with QuickBooks, it snatches the information from the business bank account. And then what that does is that it allows you to identify what the transaction is. And so we just use our bank statements, every month. Let's just say today you went out and you bought coffee at Quick Trip. You paid your marketing person and you pay rent, right? And so if you use your business account, right, QuickBooks will grab the information and then you just identify it with what hit of the button. And so then at the end of the month, you will be able to produce a profit and loss statement via QuickBooks. And so whether you have Venmo, PayPal, they're all now sophisticated enough to interact with QuickBooks, which will allow you to record the transactions, which would then allow you to present a P&L to Kelsey, myself, Warren Buffett, if you run into him.
I had a question because one of the people in the chat said, "Hey, before we get into all the transactions of money, how should I best set up my business tax wise?" So they said S corp, LLC, sole proprietor, partnership. Like, how should I set up my business first before I even get into receiving funds?
And great question, kind of a fundamental question, right? Because generally when I have a business idea, right, the first thing I do is I should go to the IRS site and get an EIN number, right? Once I have the EIN number, then part of that process is how do I want to be taxed? Because that's the IRS concern, right? And so in terms of the classification, right, because that's separated. LLC is different from an S corp, right? The S corp is a tax election. LLC is a legal term, right? And so that allows you to be a limited liability company, which means that there's a layer of protection for the business owner. That if you go out and do something, you can't do anything like a Ponzi scheme, but if you don't do well and you have to go bankrupt, then the person can't just attack your personal, right? They'll stop with the business. So that's a LLC. right? And so then you look at the S corp versus single member LLC, and that really just depends on some of your personal tax situation. Do you have kids? How much revenue, how much net income are you expecting this year? Are you expecting a lot, a little? Are you going to hire anyone? Is a big one. And so to answer that, I could just tell you that the difference between a LLC as a single member LLC is reported on your Schedule C, which means that it's just a part of your 1040. The business isn't separated from you at all. If you have a partner, then you're going to be a partnership, right? A LLC could be a partnership, right? It's two or more people own the business, it's a partnership. And then you have to file the 1065 and you get a K1. The S Corp is popular due to the fact that you have to put yourself, the owner has to be on payroll, but if the owner is on payroll, you only have to pay yourself 70% of your net income, and then the other, you have to pay yourself 30%, I'm sorry, 30% of your net income, but then the other 70% you don't have to pay FICA and Medicaid on. And so that's a huge difference. And let me give you an example. Say you have a business and the business nets $100,000, right? Then you, as the business owner, would have to pay yourself at least $30,000. So I'll say it again. But in our example, you can write this down. If the business nets $100,000, the owner has to take 30% of that as a salary. So the owner has to take at least $30,000 as a salary. With that salary, you're going to incur employer taxes and employee taxes because you're going to be receiving a W-2 pay stub, just like if you worked at Chick-fil-A or Coca-Cola. And so you're going to have to pay the FICA and Medicaid taxes as an employee. And then the company is going to have to pay it as an employer as well. So that $30,000 you would pay, that would be times 15.3%. That's about 4,500 and some change, right? And so you are allowed to deduct that 34,000 and some change. I'll say it again. They're going to take the $100,000. 30% of that must be paid in salary. So you have to have your W-2 yourself as a business owner, $30,000. That $30,000 is going to get hit with 15.3% taxes. That's FICA and Medicaid times two. So as the business owner, you're going to get your paycheck that if we just paid yourself one time, you would get 30,000 minus 4,500. The remaining amount will be deposited in your account. Then another 4,500 has to be paid because you have to match that. Right? Well, I'm sorry, that's it. That's the 4,500. So you don't have to match it. So basically, if you took $34,500, you will subtract that from the 100,000, and then that amount you would not have to pay FICA and Medicaid at all. And so that's a big time savings. And so a lot of people run to the S Corp, and that's the reason why they run to be an S Corp, is because you're circumventing paying FICA and Medicaid on basically 70% of your revenue.
Well, now that we're talking about this, I got a question for you. So is there unstated rule of how you should set up your business? I know you talked about if you have employees, if you're going to be able to pay yourself, but what if my business doesn't net $100,000? Is there like a rule saying like, if you're starting out by yourself, sole proprietor, if you're doing this partnership or LLC, if you make this amount, then you start looking at S Corp, C Corp, and is there a rule based on revenue or how you should do that?
I
Just
think
curious.
that if you're starting out a business, there's certain things that you should do and you should look at. All right. You should perform, everybody can write this down, Porter's 5 forces. Right. If we're starting
Porter's five forces.
Porter's five forces, we're starting at ground level. Hey, you know what? I got an idea. I want to own my own hair salon. Okay, Porter's five forces, right? That's how you do a industry analysis. What's the power of the buyer? What's the power of you, the seller? What are the barriers to entry? What are the threats of substitution to your products? So what you do a Porter's five forces, and the one that should be at the top is the barriers to entry. How easy is it for someone to roll out of bed and do what you do? If it's easy, the competition is going to be fierce. If it's difficult, the competition won't be fierce, right? Or it'll be a different level of competition, let me say that. And so that's one of the first things that you should do is research the industry. And part of researching the industry is looking at the actual market. What's the market size, right, of the industry that you plan on getting in? Is it, the total market, if you look at it, is 10 billion, but the small piece that you're looking to get into is 10,000. Well, does that need to be developed more? Are you going to be that novel that you can grow from 10,000 yourself until much more? And so that's just some of the ground level things I think we just don't do. Nobody really tells us this. We just kind of just go into business and we just go into business. I got an idea, right? I'm sick of working, all above, right? But when you're really looking at business, right? Porter's five forces. Number two, if everybody write this down, do a SWOT analysis. Not to turn this into grad class, an MBA, but a SWOT analysis, right? That SWOT, SWOT, SWOT stands for strengths, weaknesses, opportunities, and threats, right? Do a SWOT analysis. And the S and the W, the strength is what do you do well? The W is what you don't do well, right? Those two things are internal. That's internal. What do I do? Am I a good communicator, right? Do I have a large network that I can call up, right? If that's a strength, you write that down. What are my weaknesses, right? I'm not good with time management, right? So that's a personal one. And then you can do the same thing for the business, right? A strength could be, hey, this industry is growing, right? It's projected cybersecurity. If you're in cybersecurity, hey, that one of the strengths is that the industry is growing, right? It's going to be $50 billion by 2025, right? That's a growing industry. Okay, what do your business does well, and what does your business struggle? And then the O and the T, the opportunity and the threat, those are external. Again, the S and the W are internal. What do you do well and not well? The O and the T is external, opportunities and threats. What are the opportunities in the industry, in the environment, right? And what are the threats, right? And so those are external things. And so just what I stress to small businesses is first do that. Look at the industry that you're in, analyze the industry that you're in. And number two, do a SWOT analysis of the business.
Okay. So I want to jump back into the money a little bit, of how we manage our money. We'll get to that, Charlene. How we manage our money as a business. So do you have any rules of thumb for our businesses for how we should? I know we talked about QuickBooks. So QuickBooks is how we want to document our expenses and our income, right? Is there any other rules of thumb that we should be implementing and writing down to make sure that we're doing as we move our businesses to the next level?
Yeah, I think every business owner needs to go out and buy accounting for dummies. That you need a fundamental understanding of accounting. That's rule number one. All right.
What if I have a CPA? If I have an accountant?
What about hiring one?
Yeah, if I just hire an accountant, why do I need to know it?
Well, how does the conversation go? Right? If you know, if you're just talking with an accountant, he's using a certain language. It's just like moving to Germany and they're speaking German, but you're talking to them in English. The conversation doesn't go anywhere, right? Because there's a language barrier. And so it's the same way in business. Accounting is the language of business, point blank. And so as a business owner, you have to have strong fundamental understanding of accounting. And the way to get that is to just go read Accounting for Dummies, right? Write your questions down, and then you can present those questions to myself, another accountant. Hopefully, if you work with G-Men, then I'll be there to answer your questions. Okay, Richard, I read what a current liability is. I read what a current asset is. This is my understanding of it after reading it. Am I right or wrong? And I'll say yes. That is what your understanding of what a current asset is correct. A current asset is an asset that's going to turn into cash in 1 year or less. That's a current asset. Cash is obviously a current asset in and of itself, right? And so, hey, if you have that fundamental understanding of what that is, and then we can move to what is the fundamental understanding of a current liability. And a current liability is a expense that you're gonna have to pay in 1 year or less, right? And so if we understand those two things, then we understand a powerful thing called working capital. And that's what working capital is current assets minus current liabilities give you what you got to work with. And so a lot of times in business, when you're in business, people just don't pay you on time. That happens, right? Okay, how tight the contract is. We got N30. Sometimes people take longer than 30 days to pay you. All right. And so when people take you longer than 30 days, just because they haven't paid you, don't mean you ain't got to pay nobody else. So if you have to pay people and you ever got paid, guess what you have to have? Working capital. And so that's just some of the fundamental things that every business owner has to know and should know. And so once you know that, then the conversation with your accountant goes better, right? You get the bang for your buck. If you're paying an accountant, again, you don't have to be a CPA, right? You don't need to be a CPA, but to have the fundamental understanding of accounting, the conversation with your accountant goes better, is much more fruitful, and you get a much better return on your investment because you're having a conversation that both parties
Understood.
understand.
That we hear that a lot. That they have an accountant, or they're even getting some assistance from an accountant, but they feel like it's not going anywhere. It's oftentimes because the business owner doesn't know how to have the conversation and what to ask for and understand what they're being asked of. So that's good. That's good. I got another question for you before we jump into another one of the questions in the Q&A chat. As we're talking about liabilities and cash flow, can you help us understand how we should record our expenses? Because just because QuickBooks is pulling up and seeing how I'm swiping my business card, is there a way that you like to separate expenses out? I know I've heard in the past it's like not fixed and variable, but essentially like fixed and variable expenses.
Kind of what it is, again, just having a good fundamental understanding of accounting when it comes to QuickBooks and recording the transaction, right? Because basically the fundamental understanding of accounting is just the transactions, especially at an early stage of your business, right? And so if you can do the transaction, hey, that's a rent payment. Okay, the rent payment is an expense, right? An accountant really doesn't care if you do all your expenses in alphabetical order, how you do them, right? It really doesn't matter. It's an expense, right? And so it doesn't matter kind of which order they kind of go in, so to speak, right? It matters that they get recorded, right? And that you understand what they are, because once you understand your expenses in your business, you will lower them. I'll say that again. Once you understand the expenses in your business, you can work to lower them. But if you don't know the expenses in your business, you will never lower them. And i.e., if you have a supplier, right? Well, how much should you be paying them? How much are they costing you? Right? And so these are fundamental questions that need a fundamental answer so you can make a fundamental decision about whether I go find somebody else or whether I continue with this vendor. How much am I charging people?
Mm-hmm.
Which is fundamental. Am I charging people enough? That's fundamental.
I remember seeing it broken down from direct expenses and indirect expenses. You ever break it down like that? Does that make sense? Like if I'm selling the product, the expense, I don't incur an expense unless I sell it.
No, this
You
is
ever heard
how
of it like that?
this is what you kind of think of if you are a retailer, right? Or if you're a business that buys a product to then resell it, is different than a service business. If you mow lawns, if you're Richard the CPA, if you are a lawyer, if you are a hairstylist, you're selling a talent. That's totally different. A talent. You're selling a talent or skill that's totally different from selling a product, right? Selling a product is much harder, a whole lot harder. And so when you're selling a product, you're going to have to keep what's called a COG section, a cost of goods sold. Everybody can write that down. You're selling something. You need to be keenly aware of your COG section. That's cost of goods sold. COGS, cost of goods sold. And so as a business, when you buy a product, you've incurred an expense, whether you sell it or not. And so again, if you buy a good to turn around and resell it, you have incurred an expense, whether you sell it or not. All right. And so you want to be able to record, hey, this is what it costs. This is the my beginning inventory. Everybody can write this down. If you sell something, your COG section, your cost of goods sold, it's critical that you understand this. COGS, cost of goods sold, is beginning inventory. What you start out with. You got 3 Snickers, and those 3 Snickers cost you $1, your beginning inventory is $3. Next on the list is the purchases that you make. If you buy 3 more Snickers, and these 3 Snickers cost you $1.50, all right? So we have the 3 that we had originally at $1 and the 3 that we bought for $1.50, all right? We have 6 Snickers available for sale, right? And those 6 Snickers cost us what? $7.50. Okay. How many of those Snickers at the end of October did I sell? I sold 2 Snickers. I sold 4 Snickers. I sold all 6 Snickers, right? And so the next big thing is what's in your ending inventory, all right? And what's in your ending inventory is what you didn't sell. So in our hypothetical, no Snicker store, let's say we have 1 Snicker left, right? It was one of the last Snickers we have left, right? And so we sold 5 Snickers. So at the beginning of November, I have 1 Snicker, right? And it cost me that 1 Snicker cost me $1.50. And so my cost of goods sold was the first 3 Snickers times $1, and then 2 Snickers times $1.50, right? And so my cost of goods sold was how much? Was my 3 Snickers times $1, and then my 2 Snickers times $1.50. So my cost of goods sold was $6. That's fundamental. If you are buying and selling something, that is a fundamental calculation that you have to understand intimately to be able to really function. And so that's why I kind of stress that learning the fundamentals will allow you to have a fruitful conversation with basically anyone, whether that person wants to give you money, loan you money, That person may know somebody who wants to give you money or loan you money. Invest Atlanta, G-Man, Warren Buffett. Just fundamentally understanding this to a level where you can explain it to someone.
So real quick, thank you for that. They had another question that went back into the direct and indirect expenses. So a direct expense would be if I sold a Snicker, how much, and I sold the Snicker for $3, it cost me $1 or $1.50, depending on what we're talking about, the cost of goods sold, right? That's what you're getting at. So if I sold it for $3, the direct expense for that particular sale, the expense I incurred was how much it cost to get that product.
I think
Yeah.
if you throw direct and indirect in there, it gets convoluted, right? We throw all these terms out. I think if we just get a fundamental understanding of just the basics of accounting, right? That is, if you're buying and selling something, this is pretty much direct, all right? And so I wouldn't think about necessarily as direct or indirect. I was thinking about
Well, I asked that because the last example we gave, you had talked about like the things that were coming in through the QuickBooks that you were seeing through your transactions. So the idea would be that rent wouldn't be a direct expense. It would be an indirect expense because I have to pay it, but it's not directly influenced by the sales that I receive.
Yeah, if you want to look at it, say, hey, you know what's my overhead? All right, what do we think about direct and indirect is? Indirect is what I'm going to have to pay if I don't sell a thing, right?
Regardless,
if you're in a brick and mortar store, right, they're going to want you to pay something regardless of whether you sell nothing or not. They don't care. They just want the rent payment. If you have a loan, right, I don't care if you sell $1 million or you sell $2. If that loan payment is $650 a month, I want my $650. Period. Come hell or high water. And so the direct is something that you basically is tied to sales, so to speak. Like in this example, yes, your inventory is kind of tied to sales, right? And so that's more of a direct. Indirect again is Richard, right? If you use Richard is not waiting to get paid off of whether you sell anything or not. You're gonna get the invoice regardless, right? So that's when you think about direct and indirect costs, and that's something that you can, I would say, rise to that point. All right. The first fundamental understanding of accounting is, hey, just the basics of it. The basics of it.
Well, the question is, well, how do we do this for service? I know we talked about product based, but a lot of businesses that are on this call are service based. So if I have a service, how do I differentiate between what we're talking about, like cost of goods sold and things like that?
A service business, there is no cost of goods sold, right? You're selling your brain, right? That's what a service business is. Whether it's your notary, you are selling a gift in estate planning, whether you do hair and nails, right? You're selling a talent, right? So you don't have a cost of goods sold section. And so naturally, you tend to do better, right? Because you're at the whim of someone when you have to buy something and then resell it to them, right? A service is, especially a service that is essential and necessary, you tend to gonna do better. The numbers are gonna look better, right? And that's just the honesty of it. And so with a makeup artist, right? In a sense, yeah, you have to buy the makeup, right, to kind of use on people's faces. But if you're not buying it to resell it, it's just a matter of, okay, identifying, hey, out of this lipstick, how many lips can I paint? So that's just based upon you, right? And so that's just, same thing kind of with, if you just, well, not baking cakes, but in a sense, that's like almost like almost like baking cakes is how much product are you going to use? You know, if you are a notary, it's even less kind of, I don't want to say stressful, but kind of less of a identification process when it comes to kind of your service. Is, hey, this is what my service costs. If I charge $5
Right.
to do a notary, then that's what it is.
Okay. Let's turn the corner a little bit. So we're aware that we need to understand first. There's two things you gave us. First was accounting for dummies. The second was Porter's five forces analysis and the SWOT analysis to better understand the market we're getting into, and then how to best understand the terminology that we should learn as we're going into our businesses, right? So say we're doing okay, and we're trying to plan for 2024, and we're getting geared up, and we're like, how do I make 2024 better than 2023 financially? What things should I be looking at to make my financial decisions? I know we've had a conversation before about changing it from having uh, conversations and doing things out of this is just how I feel, how I know, it's what I think. I saw somebody the other day do something, so I'm gonna do my business like this. Instead of jumping around to really making decisions, financial decisions with your business. Do you have any advice how to make
Yeah,
better financial decisions? What should we look at when we're trying to make decisions?
you have to identify how 2023 looked. All right, I think that's the first thing. All right, so once you uh, get 2023, being able to look at numbers that are correct, right, that are not materially no incorrect and are real. This is what I really did in 2023. This is what I really
What
did
do you
in
mean?
2022. All right. And so, if I started my business in 2023, well, I don't have 2022. But if I had a business in 2022, hey, what do I do in 2022? What did I do in 2023? And so in December is when everybody on every small business is supposed to start doing budgeting, right, for 2024, right? This is how 2023 looked. Hey, where do I want my revenue number to be for 2024, right? If I made 20,000 in 2023, hey, what's a real number for 2024? And then you go down the whole P&L and say, listen, how did I do in this expense? Was it too high? Was it too low? Hey, how am I going to expect myself, the business owner, to perform in 2024? Excuse me. And so once you're able to do that and be real with yourself, right? Because again, being a small business is about being honest with self, right? How am I doing? And so once you have accomplished both of those, I'm honest with myself, and my numbers are correct for 2023, then I can budget for 2024 realistically and say, this is how I want 2024 to look month by month from January to December. This is how I want January to look. This is how I'm expecting February to look. This is how I'm expecting October to look. And then set that in stone. All right. And because God willing, 2024 is coming. January is coming. And then I will be able to say, hey, how did I do actual versus budget? So how did I do actual? How did I actually perform as the small business owner versus what I thought I would perform in January? And then you proceed through the year. And that's what businesses, you just have to do that.
Projections and then actuals versus your projection. What did you expect and what did you do? Okay. Okay.
So that's another fundamental.
I got a question over here that I'm curious what this means. So it said, what are the benefits of a business trust account?
That's a long conversation. I think, like, if you look at trust and you look at some of the other tools, I think it's kind of like if you're playing basketball, right? A lot of times you're playing basketball, and we kind of so much is thrown at the minority, in particular the Black business owner, that it's hard to even keep up with all of it, right? Somebody's coming at you with this idea, somebody come at you with this idea. You know, the analogy I just use is just using basketball, right? Shooting a three-pointer is cool, but dribbling is a fundamental thing you must do in basketball. That's how we get up and down the court, is dribbling. So if you can't dribble, right, you're not gonna be able to play basketball, right? And so you must learn how to dribble. So fundamentals of accounting, have a fundamental understanding is how you're going to move to a business trust. That's how you're going to move to various areas. Hey, you know what? I want to have equity capital injection. I just don't want to go get loan from the bank. I want to build my business to a point where somebody's willing to invest in it. That's why one of these days I want to build that business. So, you know, my business so large that Microsoft comes and cuts me a 8 to 9 figure check, and I can ride off in the sunset. That's what I want as a business owner, right? You know, that's Steph Curry. Right now, we're learning what we should aspire to do is have the basic understanding of business. So we could table the trust. It kind of, hey, let's just make sure we at a point where, you know, we can dribble effectively.
Understood. Don't learn to walk before you run.
There you go.
When you're still crawling. Got it. Listen, the conversation's been going great. I do want to encourage everybody, if you have questions, I want to let y'all know how this is set up, right? Yes, we're having a conversation. I'm asking questions, but when was the last time you got to sit in front of a CPA and ask questions about your business? Take that as an opportunity right now. If you have questions you want to ask CPA and they're going to charge your arm and a leg for, at this very moment, you can talk to us. You can talk to Richard and ask questions right now. He's not charging you right now. And so I want you to be able to take advantage of that. There's a lot of people in here that if you got questions, this is the time to ask them. I got a question right now. It says, as a business owner, is it required to pay business taxes quarterly or yearly? And is there a penalty if you don't pay quarterly?
Yeah, it's depending on the amounts, obviously, right? And so kind of the way the estimated business taxes are done, that's a great question. Something that, you know, we kind of explain to people, but we don't explain to people. Okay, the IRS, your government, runs off your tax dollar. That's how they run, right? They don't sell Snickers. They run off tax dollars, right? And so in order for them to be able to pay Joe Biden next month, his next paycheck, you got to pay taxes. That's how he gets paid, right? And so with estimated tax payments, what the IRS pretty much requires of the small business, or makes it a lot easier, is that you can pay your final bill quarterly, right? And so what they say is that every once a quarter, 4 times a year, you should make an estimated tax payment. And if you make above a certain amount, you are required to do an estimated tax payment. And so the estimated tax payments go quarterly, and they say, hey, how much am I going to make? Again, we have to kind of be Nostradamus in here. We have to have a crystal ball and say, hey, this is what I'm going to make. But you're a business. Otherwise, the IRS, I promise you, will not feel sorry for you if you don't do this. And so you got to say, hey, this year, I'm going to make $10,000 this year, right? And so that's $2,500 a quarter, right? And based upon that, this is how much I'm going to have to pay. I'm going to have to pay $100, right? And so then the year transpires, right? Because that doing estimated tax payments is something that we should be doing now. It's part of the budget, right? This is part of the budget. This is what I should be doing now. And so I have to say, hey, this is what I'm going to make in 2024. I'm going to make $10,000. That's $2,500 a quarter. Okay. And at that point, I'm going to owe $100. So the quarter, go ahead. What's your question?
Is there how do I know how much to estimate for taxes? Like, is there a I don't say a formula, but there's like a safe, like, hey, I would just put aside 20%. Like,
A budget. I
is
mean, that's
there a
something you're gonna
percent?
have
Yeah,
to.
how do I budget for taxes? Like right now, I've gone a whole year of doing work and doing all the stuff, and taxes gonna come. It's gonna smack me in the face in a couple months. Is there a set amount I should be putting aside monthly just to be safe?
Yeah, so we can't go back and redo 2023, can we? Right, because 2023, previous October 19th is done, right? And so what we can do for 2023 is say, okay, let me look at my first 10 months, right? Well, first 9 months, really, right? That's 3/4 of the year. Let me see where I'm at. Realistically, honestly, this is what I'm going to net. Okay. And then I can say where that's at, I can apply a number to it. If I just say, you know what, that number is $10,000, right? I'm going to take $1,000 and I'm going to send it to the IRS, right? Just for my first 3 quarters, and then I'm going to do my taxes, all right? And so I think it's two things that you have to do as a business owner. And it's tough, but is required to function realistically, financially. Is that the first thing is that, hey, during the year, I'm going to do my accounting, and I'm also going to have to make estimated tax payments. At the same time, come December, I have to do an annual budget for 2024. I have to do this all at the same time, and yes, it is required if you want to function optimally fiscally as a business. So you must do those two things. And so, everybody on the call who's a small business owner needs to say, hey, do I have an accounting system software? All right. If I don't, I need to get one. Right. I need to contact West Atlanta and see, hey, how can you guys pay for me to get an accounting software system infrastructure set up? And at the same time, when you're making that phone call to Invest Atlanta, you saying, hey, I'm gonna have to go back through my bank statements. I'm gonna have to figure out what's my income, what is all my business expenses, and then I get a net number, and I'm gonna have to say, okay, if that net number is 10,000, let me send them 1,000, right? Let me see how rest October, November, December do, right? I'm gonna, research and have kind of an idea myself. Hopefully, I can run it by an accountant to say, okay, what is it? Okay, I end up at 13,000, right? I paid $1,000. Hey, what's my final tax bill going to be? Because I know that final tax bill is due April 15th is due. So if another $300 is due, hey, I got to pay $300. And so some of that, your personal comes into play because most small businesses are what we call flow through. And flow through, this means that the income from the business flows through to you. The business doesn't pay taxes. You, the business owners pay taxes. That's critical.
Mm-hmm.
That is fundamental. Most businesses, if you're LLC, if you are a single member, if you are an S corp, the business does not pay taxes. You pay the taxes as the business owner. So that income is going to flow through to you on your 1040. And then your lifestyle comes into play. How many kids you got? Are you renting or are you buying? Hey, how much do you get to charity? Right? How much is your property taxes? How much is Mayor Dickens charging you property taxes, Fulton County? So your life comes into play, right? So the business is the business income you're going to have to pay, and then you have to file your tax return itself. So it's a process that we need to do quarterly, and it's just a process of really sitting down with someone. Because really, to be honest with everybody on the call, once you do this thing once, twice, 3 times, you got it. You got it. Once you have a fundamental understanding of it, it's going to be like clockwork. You're going to say, okay, this is what I want to do. This is what's coming in. This is what I want to pay, and then I'm going to take care of it in April. This is what I can do to mitigate this, right? Because you get to a point where you can record it, right? And kind of how to record it, then the next step is how do I mitigate it? How do I lower my tax rate? Right? What are some things I could do, Rich, that I could lower my taxes? Right? You want to pay something because as a business, you want to be profitable, right? And the only businesses that don't pay taxes are the ones that are profitable.
So we don't have a number. There's no 20% safe, and then we can work down and not have that. But I got it in the bank just in case.
You know, if you want to do it lazily, I mean,
yes.
if you want to, it's going. I mean, this is business, all right. It ain't the weary, all right.
So if we wanted to be lazy, then you would just put a percentage aside. But if you want to do it the right way, go back and analyze your 2023 from what you did from January to October. Look at it, see what you really did, and then make a plan from that.
Correct. Right, because you could throw the numbers. Okay. You could throw the numbers into your actual tax return, right? And so you can do this and have a number that's real material, like you're correct in there. And then once you do that, right, it's kind of like playing a game and knowing the rules and not knowing the rules. Once you know the rules, you can cut a fool when you know the rules. You can run amok. You know the rules, but if you don't know the rules, you're going to be prey to the game.
We got a couple more questions real quick, Richard. It says, what happens if we consult from multiple states remotely, but from Georgia? How is tax filings handled? I want to say, because your business is, if your business is structured in Georgia and in the city of Atlanta, then you would have to file it however we do taxes in the state, right? It doesn't matter if I'm based here and I'm working remotely and consulting with companies in California, New York. That doesn't matter, does it?
See, this is more of an advanced topic, right? Because if you consult in multiple states, right, the state also has a tax, right? Most states have business taxes, right? Yeah. And so we have to get this. This is critical. This is a critical thought process, right? If you are in Georgia and you consult with someone in Texas, right? This is critical. They're in Texas, right? Well, who's keeping them safe so you can consult with them? The Texas government keeping them safe, right? How was the Texas government keeping them safe? They are selling Snickers, right? They're keeping that individual who you're consulting with safe through tax dollars, right? So your question that you must ask yourself, if you're selling a service or you're selling a product into any one of these 50 states in the United States, is do you have nexus? Nexus is spelled Nexus. Nexus. Nexus is a connection to something. That's nexus. A connection. Nexus. Connection to something, right? Do you have a connection to that state that will require you to pay taxes in that state? That's a question, right? Because again, go ahead. Do you have a question?
Yeah, you got to throw me for a loop now. So if I am sitting here at the Russell Center in the city of Atlanta, and I have a consulting firm, and I'm working with a company, I'm consulting for a company in Texas.
Yes.
What does Texas taxes have to do with my taxes? Wouldn't the business that's located in Texas that I'm helping have to pay taxes in Texas? But that tax don't bother me, right?
Again, right? Who is keeping that client in Texas safe? How are their roads being built? Through tax revenue. That is a ubiquitous trait for every single government, right? Tax revenue, right? We understand bonds and we understand some more things, but the central bloodline to a government, whether that's local, state, federal, is your tax dollar. So how are they keeping your client in Texas safe? How are they paying for their roads? Through tax revenue, right? So is it fair for Kelsey, for anyone on this call, to make money in Texas and not pay taxes there? Is it fair to the citizens of Texas? Somebody got to pay it. Just like this is fair to the citizens of Georgia. If a Texas company has one of us as a client, right? So Brian Kemp is required to keep you safe. That's his job. Andre Dickens, that's their job. How do they do that?
So I want to dig into this because we should have been talking about this the whole time. I want to dig into this, but I don't have time. I got one more question, and then I'm going to plug you so they know how to get more information. Are tips received from services taxable, or can tips be considered a gift?
Well, again, the government runs on your tax dollar, right? If you serve me and I give you
That's
money,
income.
is that a gift? If that's the case, I should have met you outside the restaurant. It gave you a tip just because you look good, right? That's a gift. But if I walk my behind in that restaurant and you serve me, ma'am, sir, that's not a gift. Now, how was it taxed, and can I report it, and how do I report it? And people are using debit cards now, so it's more it's easier to for it to be reportable. Back in the day, servers lied all day. Some of you on the call with servers, you didn't tell people to report all your money. You know what the word you did. You said I made $17, and you made $117. You kept $100.
So the answer is tips are income. Even if people tip you with your business, they do a little extra on top. That's still income. You select that. You put in your income in your revenue. Correct?
As a server, you W-2, so you're just gonna be taxed as a W-2 person. And so that's kind of the tip game, and unless you, I don't want to say you have Magic City, what I'm saying, AW2, but you talking about just tips. Yeah, you on the clock, you get tipped that somebody. Yes.
Yeah, that's income. Got it. Listen, guys, I appreciate you. I want to shout out Richard Wright and G-Men for their assistance with this webinar. I hope it was informative. I hope that what I really hope to happen is that things pique your interest, and that you realize, number one, I can't go back to 2023 or 2022 and accurately document my financials and how I did. If you feel uncomfortable about that, wonderful. I want you to do me a favor. There's a website. It's called atlinbusiness.com. That's atlinbusiness.com. You want to go to that website. At the very top, it's going to say find a consultant. I'm going to find a consultant. It's going to drop down. When you go to find a consultant, you'll see a whole page of consultants. I want you to search G-Men. And when you search G-Men, you click connect here with G-Men. They'll fill out a questionnaire, and it will go to Rich and his team. And whatever it is you need for your business, they can assist you. If we're talking about finance right now. You need accounting help. You need help set up your QuickBooks so it's accurate and it's pulling up your expenses and it's recording your revenue and everything is right. We can do that. And it is no cost. I don't want to say free. It is at no cost. So go to atlinbusiness.com and find a consultant to help you get your business in order. That's what this thing's all about. I want you to see how smart and how knowledgeable Richard is. He's one of the few Black CPAs we have in the nation, one of the few. And so I want you to take advantage of the fact that you can get access to him and his company for your business needs at no cost. atlinbusiness.com. Remember, this was recorded. This will be emailed to you. So the information and the recording and Richard's information will be emailed to you. So don't worry. But I want to know that we're here to help you. And we're excited that you joined us tonight for this webinar. And I want you to have an amazing night. That's it. We'll be back next month with another webinar. Don't forget, next Thursday at the Metropolitan Goodwill, the Goodwill of Metropolitan, we have a network mixer. You can go to investatlanta.com, scroll to the bottom where events are, and sign up to come to the event. We have a mixer. It's going to be amazing. It's going to be at least 40, 50 of our other small businesses there and our resources. So I want you to come and make sure you meet somebody and get some resources in your hand, meet some people. Let's make this thing happen. Let's grow our small business here in the city of Atlanta. With that being said, y'all have a great night. Thank you, Richard. Thank you so much.
Have a good night, everyone.